Hey folks, my guest today is Deep Chakraborty. He is an entrepreneurial business leader currently leading enact, an award-winning cloud platform for the distributed energy industry. The company is on its fifth year with market leadership globally in the sector of software platforms for solar and storage. Deep, are you ready to take us to the top?
Absolutely. Go
Okay.
forward, Nathan.
So when you say global leader in this space, how do you measure that?
We measure it by number of users, customers, and projects. So an X platform processes over $1.5 billion of projects now for solar and storage across the world in 23 countries. And we have deployed over 3 gigawatts of projects we always measure in terms of capacity.
Okay. And is that historically over the past 5 years or just in 2021?
The run rate is in 2020. Since September 2020, we have processed over 1.5 billion. And of course, just to remind you, we are a software platform. We're not a developer. We're not selling any hardware or financing anything. We're just doing what we call the solar lifecycle project management software. And so that's really unique, having a platform that's so active in so many countries.
So what does that mean? Since September 2020, you put 1.5 billion of solar projects through your platform. What does that mean?
So our platform is unique. It's a cloud software hosted on Amazon, used by both solar developers and installers, as well as the end customer. And what it does is automates the entire journey of the project, so they can pick any address in the world, design a system remotely, generate signed contracts, and then execute the project, all tracked online. And of course, the end customer, they're spending a lot of money on these projects, to save money on the electric bills, and as well as doing the green thing, they're able to measure the benefit too for the first time in dollars. So we project the benefit in dollars and then we measure it. So we're really making it transparent for customers and providers to now do these transactions seamlessly using an independent platform that is, the source of truth. And so this platform has processed over $1.5 billion of projects in the last 12 months,
And deep
which
across how many customers?
so we have over 100 enterprises in 23 countries and 1,000 plus users. Users meaning people who actually log in and do work on it. Industry, of course, is a niche. Solar is not a massive industry, but even in the US, there's a potential 50,000 plus users for our platform, and we've already crossed the first 1,000.
What does the average provider pay you per month or per year to use the technology to manage these solar installations and projects?
The average company, in the SMBs or small and medium companies, which is the majority of the market, they're spending less than $10,000 a year to use the platform, and it's a user per month subscription model. The end customer, which could be a building owner, a home, might spend only $50 a year on the app. A large commercial hospital might spend $1,000 a year because their system is much bigger.
Mhm. When you look at your revenue over the past 12 months, what percent came from the providers versus the homeowner wanting to track their energy usage and tax rebates and things like that?
Great question. So we actually launched with the providers first in 2015, and that platform is still 80% of our revenues. The end customer app, which is now on iOS and Android too, that's less than a year old. It's growing really quick, but the revenues are 20% of the total because it's a newer offering.
How many homeowners are on it so far, or larger facilities with solar installations?
Yeah, we have crossed 1,000 homes last quarter in Q3. And in specific markets, specifically markets like California, where we are in, or even across the world, like in Delhi or in Dubai, there are pockets of dense use because we have very active platform users. And for example, in Delhi now, we have crossed 500 users on the platform in the city of Delhi who have solar, and it's growing rapidly because of the ecosystem we've built there.
So the 100 providers, which is 80% of your revenue, paying on average $10,000 per year, that would mean you're doing just on that side of the business about $90,000 a month in revenue. Is that accurate?
Yeah, I don't want to disclose our revenues, but I will say that we are right now around $1 million a year run rate in revenue, and it's growing rapidly, especially the last 18 months.
So you'll break a million in terms of run rate by the end of the
Yeah,
December. Okay.
absolutely.
And where were you exactly a year ago so we can calculate growth rate?
We are much lower, probably like we have grown about 40% this year, and so which is very great, which is a great growth rate considering we haven't really invested much in the business. We're still bootstrapped. There's no venture investor on this. We are not institutionally funded.
So you own 100% of the business?
No, our employees do. I mean, every employee has equity in enact, but together the founders and employees still own the company. We have no institutional ownership. We do have.
How much of your ESOP pool did you decide to set up? I mean, we're talking 10%, 20% to employees or more?
We have always done, we have maximized the ESOP grants legally possible in the last 5 years. But employees, typically in the US, have, an annual ESOP cannot be more than 15% of your holding, and we have tried to maximize that. So yes, together the employees and founders own the majority of the company. We do have, though, some equity investors this year. We have announced that, who are in, early stage SaaS investors, family offices. They're on our website. We also now listed on Start
Oh,
Engine.
sorry. So how much did you raise in equity?
We have raised almost $4 million now, but our cumulative revenue has been more than that. So we're kind of leading by example. Revenue comes first.
So sorry, 4 million you closed this year.
We have closed $4 million of equity investment in enact Systems since launch. And of course, the first round was in 15, which was announced. And then 18, we got seed investors who took preferred shares. And then we also got early stage SaaS investors now in the last year, who are helping our growth specifically.
Break this down for me. So the SaaS investors this year, how much did they put in?
We have raised 700,000 on SaaS investments. I think you should go to Crunchbase. It should have the exact numbers. Please don't quote my numbers on the interview. I don't have them on the top of my head, but Crunchbase has all the exact details, and on our website we have listed the investors also.
I understand, but I want to capture more of the pattern here, right? So when you did the round in 2015, why couldn't you bootstrap the business, and how much did you raise from those family and friends, or however you did it, to get the MVP up?
Oh, we still. What's the question exactly again? Could you repeat that?
How much did you raise in 2015 to get the MVP live?
We raised $1 million in 2015 May, which was announced release. And then we were probably the only company that has gotten a US government grants, Department of Energy grants, to develop a platform, which is patented, by the way. It's a blockchain-enabled platform. And that in 17. So we could not have done it with just $1 million. It's a massive platform, now active in 23 countries, same product. But yes, the government grants helped us. And then we raised money in 18, 19, and 20 to make sure that we have always runway for growth, because we've been hiring employees in the US as well as in India and some other markets.
So I see you raised 1.4 million in 2018 from MB Ventures. I don't see anything in 2019 though. What did you raise in 2019?
2019 and 20, I will email it to you separately. I think there's some disclosures out there in Reg D. Probably not all of it is on Crunchbase, but I think you should all have it in Crunchbase if you have an account there. If you
no, Deep, it's not, because my research team looks at Crunchbase. Obviously, that's a public source. That is not listed. There is no round listed under enact Systems in 2019 on Crunchbase. So you use Start Engine, it sounds like, to raise some capital in 2019. Is that what happened?
No, we just got listed in Start Engine last week, and we are SEC approved for Start Engine. I think we have already raised almost 100K on Start Engine in 2 weeks. It's a great way for you guys to spread the word. Individual investors never get a chance on these, let's say, accredited rounds. So we're seeing good traction there.
Mm-hmm. Okay, so this year, so Start Engine's just now, but going back a little bit, you said you then raised, whatever, it's 1.1 million on a convertible note here in 2020, 2021.
So let me give you what I'm reading of Start Engine. So $1,025,000 May 2015. Then we raised 1.8 million May 18, and then we have raised 1.2 million between 2019 and 2020. It's also on Crunchbase. Arca Ventures is our lead investor. It was announced in January of 2021. Arca Ventures, which is part of $1 billion venture capital firm, the early stage arm. And then we also raised money from Olympus Capital. It's also announced. So I think maybe this Crunchbase you have is a little old, and I'll email this to you.
No, Deep, it's the exact same Crunchbase you're looking at. We're looking at the exact same data, okay? I'm looking at literally right now on my screen. So just to be clear, though, the reason I said this is you just said that you were bootstrapped. You are not bootstrapped. You raised 4.8 million. So you've raised 4.8 million to build $1 million a year business. In other words, you raised $5 for every dollar of ARR you currently have, correct?
We have also generated $4 million of revenue while we raised $4 million of capital. And I want to correct you there. We have raised 3.5 is equity and 1 million is grant.
I see.
So we are proud of the fact that we have actually generated more revenue than what we have raised. Our competitors have raised hundreds of millions of dollars. Probably raised. One of our competitors has raised 321 million.
Well, Deep, here's the problem, though. You raised 1.2 seed in 2015. You only grew 50. Now, by the way, if you're bootstrapped, this growth is fine, right? Growing 50% year over year. At your stage, growing 50% year over year, and you're on the VC track, that's not a good growth rate. That's a really bad growth rate, actually. You should be doubling or tripling year over year. Why aren't you growing faster?
Well, we should definitely, we are doubling and tripling, but we can only grow once we build the platform.
Well, no, you're not doubling or tripling. You said you're doing 62,000 a year, a month a year ago, and that you grew 30 to 50% year over year, and you're about to break $1 million run rate. That's
No,
not fast enough growth for the VC capital you've raised.
you're absolutely wrong there. So two things. First, we haven't launched our Engage app until 2021. As I told you, the Engage is the future, which is the app for the end customer on iOS and Android, which just went live on iOS in June. So the whole platform wasn't really live till now. And the year we have gone live, we are in Delhi, Dubai, and DC at the same time. 18 employees and $1 million spend. We're growing at a rate which is unheard of. We are the only platform in the
Deep, sorry,
world.
I want to make sure factually you're accurate. You're not growing at an unheard of rate. You're growing at a rate that is way too low for someone that's raised $4 million of VC capital. That's way too slow.
Yes, slow relative to some other platforms which are pure B2C, but don't forget we haven't finished building the platform yet.
Well, you're not
And
B2C, you're B2B. 80% of your revenue is coming from providers paying you to manage 1.5 billion to spend, correct?
no, we are both B2B and B2C, remember? So I think you never asked me what the platform does and how it works. Let me explain that to you. That'll probably help you understand what it does. The B2B is definitely a history, which is where we started, but that's not where the market is. Consumers, when they go and get their solar systems and now the app to measure, that's really the market, which we have launched in 2019 and 2020. And that's the growth we're seeing now. Yes, it's only 20% of our revenue, but that's where the future growth will take us to a huge potential. Of course, it takes time to build the B2B first, right? You can't have B2C without the B2B in the back end. And that's what you're referring to as the slow growth.
Well, yeah, but when you say that other people have raised unheard of amounts, it's because they're growing faster than you. That's why they're able to raise so
Of
much,
course, I
right?
don't want to comment on raising money. It's a good thing, but we are proud of the fact that we have gotten to a point where most of the revenue funded the company, not unheard of capital before it was needed.
Yeah, I just want to dive there because you said I wouldn't have driven so deep here if you didn't say you were bootstrapped at the beginning of the show. You're not bootstrapped. You've
Not
raised a bunch of
anymore, of
capital.
course, not
Well, no,
anymore.
you were never bootstrapped. You raised 1.2 million in 2015. You were never bootstrapped.
Yes, you're correct that in 2014 we were completely bootstrapped. In 15 we
Okay,
definitely raised money, and then as we grew, we have gotten in family office and angel investors, right? Not institutional capital, and that's very different from some of our competitors.
fair, fair. That's fair. I'll agree with you on that. Okay, so tell me more about the team today. How many folks full time?
We are only 18 employees, 7 in California and 11 in India.
Oh wow.
And
How many engineers?
of the, well, I would say of the 18, 16 are engineers. So we are definitely tech focused and product focused. We don't have a big sales team yet. The product is literally selling itself.
Hmm. When you raise the 1.2 million, I mean, most companies are selling 10 to 20% of their business every round. Were you in that same sort of range?
We were always, yes, very similar.
Okay. So how do you think about dilution? I mean, you're getting diluted like crazy here, every one of these rounds.
Uh, as I said, even after all this money raised, the founders and employees own more than the majority of the company. I think we are at the point now that the platform has finally achieved what we wanted to do 5 years ago, that we are ready for growth, and we're not really looking at our holdings. I think in terms of value, the platform can do significantly more revenue, and we will need capital to grow that. So yes, we are ready for dilution because we know that it'll create value for investors and us.
That's the bet that it will create value. That's the bet, right? You also lose optionality when you raise at certain valuations because that means you obviously have to grow into that valuation, and then it takes certain M&A opportunities off the table as well. But it sounds like you plus the ESOP pool is 60, 70%, and investors own call it 30, 40% today as you scale.
Correct. And other founders, not just the ESOP pool. We have 2 other founders who have battled with me on the trenches the last 6 years. So we know what we are up to, and it's a very exciting time ahead. I'm sure you're reading what's happening with solar and storage.
Mm-hmm. I mean, if you have three founders, again, I'm assuming like ESOP pool is 20%, and then that means you three founders are splitting the other 40%, and investors own the other 40%. I mean, so you're already diluted down to like 10, 15% of the business, right?
I don't want to comment on holdings because I'm not legally allowed to. But I will say that no, our founders and employees together, we are well above 60% total. And in terms of investors, we know that will change, right? When we announce our next rounds in Q1 and Q2 next year.
What do you mean investors will change?
As we bring on more investors, obviously we know that we'll get diluted, and that's okay. We're ready for it. No issues.
Got it. Makes sense. How are you getting new customers?
Online. We have B2B and B2C marketing, so both ends are active. Most of our customers, especially since the COVID changes, we're finding the need for software is significantly higher than before, and people are willing to buy and pay and use something online with a webinar or a Zoom call like this. We have no on-site sales; it's all inside sales.
Mm-hmm. How many sales? I mean, you have one inside sales rep?
We have three people selling in the company, including me. One, of course, is myself. You're looking at him. One in the US and one in India. With three people, we have gotten over 100 customers in 23
Very
countries.
cool. Deep, let's wrap up here with the famous five. Number one, favorite book.
Favorite book? Gosh, that's a tough one. Sherlock Holmes.
Number two, is there a CEO you're following or studying?
Elon Musk.
Number three, what's your favorite online tool for building enact?
Online tool for building enact. Jira.
Number three, how many hours of sleep do you get every night?
I always get my 6 hours.
That's good. And situation, married, single, kids?
We are married, 2 kids, high school and middle school. We're in California, and we're enjoying the weather. Of course, finally it's raining here after 9 months of drought.
And how old are you?
I'm 45.
Last question, something you wish you knew when you were 20.
I wish I knew how hard it is to build a company from zero. And this is my first one.
Guys, enact Systems, working with folks managing solar installation projects, over 100 enterprise customers, put $1.5 billion to the platform since they launched 5 years ago. They've raised, call it 3.8 to 4-ish million in total capital. Some of that is obviously grant money as well, but team of 18 scaling out. They just launched their consumer app so homeowners can track tax savings and usage of those installed solar panels, and that is their fastest growing revenue stream. They're flirting with $1 million run rate today, up from $600,000, $700,000 a year run rate just a year ago. Deep, rooting for you. Thanks for taking us to the top.
Thank you so much, Nathan. Appreciate the opportunity.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.